All right, welcoming everyone to perhaps the last IMR of the year 2017. I'm not sure whether we are going to have one next weekend. We might, not sure where I will be, but let's see. And and perhaps an interesting way to sort of end the year in the well, it's not really the end, but still. A lot of things have happened since the last IMR, so we'll get cracking with that. Let's see. In terms of major events, we have BJP winning Gujarat, right? So that was a definitely something that was expected. However, uh, they did not win with the sort of majority that they wanted. Of course, they will not admit that. And there is definitely this thing about a certain amount of slippage of their vote bank in their most well held stronghold state in India, Gujarat. But all credit to them in the sense of that sixth time running re-elected. That's an amazing series of wins. Anyhow, so that was one. Then we have, of course, our Rahul Gandhi elected as head of Congress I in India. Right, so he's formally taken over Congress I, and we'll see. We'll see. How things move from here under his leadership. Some people will not call it leadership. Some people just say inheritance, but we'll see. Right. In the meantime, let's see what else has happened. We have Jerusalem as recognized as the capital of Israel by USA, and there's this whole drama of the UN Security Council vote and the US General Assembly vote. Quite, you know, new, if you can call it standards. Unfortunately, lowering of standards is probably the best way to put it, being set in terms of global politics and UN. So that's another thing. And then what else? I mean, oh yeah, the tax bill being passed in the US. So that's a big thing. Tax cuts for just about, well, in a sense, everybody. And the US markets have rallied to that. Many of the rich people will have more money, but whether that thing, where that trickles down, etc., we'll have to really see. So how that thing goes, and of course, that is probably the biggest win for Trump so far after he got elected. One big campaign promise sort of implemented, I guess. I'm just thinking if I'm missing anything. Quite possible. Been a little bit out of the loop for some time. Week 10 days. Yeah, right. And of course, so US and India markets at life highs, right? It'll be interesting to really see where we go from here in the sense of how much higher or at some point. So those of you who have been regular, you are very well aware that for the last about 2 months almost, we've been talking about possible top coming in place for various reasons. Well, obviously, at this point, the top is not yet in place, and as a matter of fact, new highs are being made. Question of sustainability is still something that is up for debate. And then we had what's that? The Financial Resolution and Deposit Insurance Bill, FDRI, right, 2017 in India, with a bank bail-in clause that has been deferred. And interesting, this was deferred after the Gujarat election win. There is the speculation that you know the FR, that perhaps the lack of the significant as strong a majority in Gujarat is perhaps behind the deferment of that bill in Parliament. There have been log jams in the Parliament after the Gujarat elections, and the government has really not been able to get over that. One of the consequences of the lower strength in the Gujarat Parliament for the BJP is that they will not be able to re-elect as many Rajya Sabha members from the Gujarat state to the Rajya Sabha as before. So that could affect some of their prospects from there. But then, well, next year is a host of elections across many Indian states. Definitely one of them is Karnataka. Here we are in Bangalore, head of Karnataka or capital of Karnataka. There will be lots of interesting things to look forward to in the year ahead. Right. So from a overall perspective, 2G scam acquitted. Quite a shocking decision by the court, or just about by everybody. Everybody's opinion of that. And we'll see if it goes to appeal, etc. and all. And today's news is that Lalu Prasad Yadav, right, has been held guilty in corruption and has been put in jail. So he should be in Ranchi jail right now. We'll spend the new year there. And on top of that, there is all his properties that I don't know if he's including his family, has bought after 1920. They will all be, sort of confiscated or attached, as the official word goes, and we'll see what happens to that. Right. So, well, as usual, the world full of interesting places. Brexit, sort of stage one gone through. The Deputy Prime Minister of UK resigned last week, I think, if I'm right. And we'll have to see how that goes. All right. What's happening in the UK? Not really that clear. All right. Okay. So globally, those are the sort of what would I say? Headlines that I can think of. If there's anything that you can add, please do so. So with that at the back end, let's jump into the chart review from the global perspective and see how that is going on. So this is the daily chart of the Dow Jones Industrial Average from the US. Quite strong in its trend. Very it went up again after the US tax bill was approved, and this continues to head up as of now, forming a sort of flag. Could go higher. We'll have to just wait and watch and see how this pans out. There have been a number of it's not there on the chart here right now, but number of divergences, bearish divergences, and right now, well, the trend can only say is very strong on the way up. How far higher? I guess we'll just have to wait and watch. Now, making this a weekly chart, one of the things to here on a weekly chart notice is that you have this accelerating trend upwards, right? As you can see, this was the trend, now even faster. This is just clearly unsustainable, and at some point we'll have to see how this changes, maybe into sidewards, if not a top, and a reversal. We just have to wait and watch. Right? Okay, so that's the Dow Jones, the S&P 500, the broader market. Well, that's also very much making new life highs. Really nothing much to it. Nice higher tops, higher bottoms, and it continues to be on an uptrend. Last time we said Europe was sort of the mixed signal, and well, that continues to be a very much mixed signal. So you can see Germany here very much going sideways. There was the coalition government didn't happen. I'm not sure what the latest is in Germany, but after Merkel was unable to form the new coalition government and talks broke off. I'm not sure what the update is, but well, you can clearly see that Germany is now going very much sideways. So there's really nothing to read into that. What's clear is, of course, that a top has been set for now. This is the multi-year chart, and we'll have to just wait and watch and see what happens. So Germany not showing any, what would I say, any particular directionless, and one big bearish engulfing pattern here weekly on the weekly chart. So that's something else to keep in mind. And then looking at FTSE. Now let's look at CAC first. So CAC, basically the same thing. This is the weekly chart. Looking at the daily chart, again more or less the same sideways move, so nothing to add there. And then looking at FTSE, well, really interesting animal in the sense that it continues to actually make a new life high. So in spite of the iffiness of the Brexit there, this is a really amazing move. Daily chart, that too, right? Big up move, and then we have this pause as on 22nd yesterday, right? So today is Saturday. This is still the week ending 22nd. So definitely a new life high on the FTSE. So US and UK, right? But the UK thing is a lot on the basis of devaluation of the pound, perhaps, etc. Other issues. So if you were actually invested earlier with the devaluation of the pound, how much it would the return would be in terms of your currency of origin, that's a different question altogether. And looking at Nikkei, just mostly for the sake of completion, well, there you have it, really also going sideways. So except for US and UK, all the other major global markets seem to be really not doing much. Australia was one thing that we had mentioned, for those of you who remember, and that continues to move up after we spoke of breaking out of this 5,955 level. It's just continued to rally and rally and rally, and there's probably more upside left, quite possibly in Australia. Okay, so yep, so that's what we have here. So let's see what we have to see next. Now coming to the situation in India, well, you clearly have the Indian market making a fresh life high on Friday. Okay. It was a big move, so especially after this big gap down move that happened in the early part of the day when the election results were out, massive fantastic recovery, and then 2 days of pause, and then Friday 22nd of December 2017 continues to go up and actually creates a new fresh life high, both on a closing and on a day high basis or life high basis. The only thing, oh yeah, come on, with this whole move and especially when you look at it in a longer time frame like weekly, is that there is bearish divergence, and this is now on a weekly chart that we are looking at, right? You may like to draw your attention here, middle of the screen, right? You can see that we had a similar bearish divergence there, and then after the market topped out there at around 9,000, it went down all the way to 6,900, say 7,000, so 9,000 to 7,000 or 2,000 point fall before moving again up, and that start recommencing that journey. So something just to keep in mind. Also, if you look carefully, right, very sharp up move here, and I would submit that here the up move is becoming a little less sharp and more gradual. Now, I'm not saying this, I'm just thinking that, well, you never know, maybe we're forming over the next 2-3 months a sort of maybe a rounding top, but way too early to say that at this point. And well, very interesting. The monthly chart has this, what we call the rising wedge, which if and when that breaks could be the start of a drop, and now it's more or less at the apex. And this is a monthly chart, so for another 1 or 2, say maximum 3 candles to form, you're talking about 3 more months and 1 more week of this December 2017 is still left. So that situation could change in terms of how that last candle looks. But another 2-3 months, this has to be decided. And when you look at the weekly chart on the indices, on the indicators, well, there is a certain divergence which is there. But on the other hand, if you look at volumes and all the other things, you're looking at the volume indicators, they're all really quite strong and very bullish. So clearly in the short term, as in the next few perhaps days or even a couple of few weeks or even 1 or 2 months, the trend is up. But it's also true to say that as it's going up, it's probably getting a little weaker, and we'll just have to wait and watch. So it's all probably a good thing to keep stay with your long positions. If you want to add, sure, add on maybe stock specific opportunities, not on the index in my opinion, and keep a strict stop loss. Right? So that's how it should probably be. So that's the case of the Nifty in terms of levels. Well, it's already at 10,493. It went to a high of 10,501. So 10,500, and I guess every 100 points above that, definitely 11,000, 11,500, 12,000 are the points to watch out for in terms of resistance levels, etc. So we'll see how that pans out in the future. But like I said, short term, the trend is up. Long term, a little more circumspect about that. Okay. Right. So with that, let's move on to the sector indices and see what they are telling us. Starting with the Nifty Next 50 or the Nifty Junior, that has distinctly and clearly made a new life high, which is all very good. In terms of a weekly chart, that uptrend definitely very much intact. We were referring to perhaps sort of falling wedge or a rising wedge, but it's clearly an uptrend channel as far as the Nifty Junior is concerned. Looking at the CNX 500, well, that's a really impressive weekly candle, right? So after almost 1, 2, 3, 4, 5, 6 weeks, 1.5 months of a sideways move, this week has been exceptionally good for the CNX 500, the broad. market. Right. Coming to the individual sectors, starting with the banking stocks or the bank Nifty. Well, interestingly, that has not been able to make a new life high. We'll have to really think about that. There is a bearish divergence for sure, and this one is on the weekly chart, please note. Right, so whether you're looking at MACD, you're looking at RSI, or you're looking at even stochastic, definitely bearish divergence there, while the market continues to head up. So we'll have to see how this pans out, but well, at least in the short term, warning sign. And remember, this is on the weekly chart, so that's definitely something not to be ignored, in my opinion. If I look here at the monthly chart on the okay. Right, so looking at the monthly chart, trend is, well, definitely intact up, but may not be getting a little tired there. So but we'll just keep an eye on that. So weekly chart on the bank Nifty is where some of the issues might be. So again, looks like short term bullish, but in the longer term it perhaps could go down. Not good go down, we'll have to just wait and watch. I take the go down part back. So moving on to the major indices, starting with, let's say, IT, which has been doing exceptionally well, right? Looks like a sort of recovery of sorts across the sector. This is the IT index, and on the weekly chart you can see how impressive it is and how strong the green candles are and how strong the upside is. For those of you who had or have participated or attended or viewed the fundamental analysis review of IT, we did make a case that it was possibly one of the sectors that was quite cheap and was possibly a place where sort of what do you say up move could happen, especially after a 2 year, not especially, but after a 2 year downtrending move. Maybe the worst for IT is over. Now looking at the daily charts for IT, well, you can clearly see nice strong green Mazu Bozu candles. The red ones are also actually strong, so the sense of volatility and of iffiness is very much there, but clearly higher tops, higher bottoms across many months. And IT is one sector which should be assumed to be a strong potential buying opportunity. As usual, risk supply uh, and disclaimers apply. And right now, IT, that would be the resistance to or support now. To watch out, it broke out of that on Thursday. Friday, it relentlessly continued to go up. Yeah, so that's IT. If you look at it carefully, now after not an extended, but a sort of up move from all the way, say 10,000 to 11,300, this is a head and shoulder bottom that we are seeing. Left shoulder, head, right shoulder, and a clear breakout. Now, if you look at the levels of the breakout, then I would say 11,335 to 11,000, so 335 points. So from here, 11,700 should be the next measuring implication for the CNX IT space, which is easily about a 2.5 to 3% move, which could happen. So we've been in an uptrend in IT from say mid July, mid October, and the trend definitely is now up on the IT side. All right, looking at some other places, let's look at pharma. So Pharma continues to be in that multi-year downtrend since 2015, right? uh, Really nothing substantially changed much on the daily chart. There's always this breakout levels that tend to happen, or attempted breakouts, but still too early. So we've said here head and shoulder bottom over 3 quarters, not just 3 months. Please note that we are now looking at a weekly chart. Potential 15% upside after breakout and 30% from 9,400 levels. Investigate pharma stocks more individually is a note I had put. I'm not sure when. So right now, the thing is, we've not yet made a new lower bottom. We seem to have caught a bottom here temporarily, at least for at around 9,000. And it'll be interesting. So remember, this is a weekly chart, so many weeks, at least say 2 months, maybe more, to see how this space here pans out, or whether it goes down. Now it could also be that just in a week or two you have some big moves, big news, and some of these pharma stocks either start going up or down quite strongly. You'll have to look at individual stocks and maybe stories behind them. Pharma is sometimes notoriously challenging because the event risks announcement by FDA about their inspections on factories or sites in India, about molecule discoveries, about how the trials are going, all these can definitely tend to be a pretty strong challenge. All right. So we have pharma. Then going on to the banking space. So already mentioned that earlier that the bank Nifty did not make a new life high, and it was leading the way for the market right now. It looks like IT is pushing the index up, Nifty up right now. Definitely not the banks. And if you look at the banks in weekly format, well, uh, upside still possible. Definitely not saying no to that, but we also have a bearish divergence we'll have to see and watch. So between everything that we saw so far, I think the sector to be in would be IT and not so much banks. One should have been in IT perhaps already a few weeks back, but uh, that's outperforming right now. All right, looking at the PSU Bank Index, okay, and moved up sharply. There's a weekly chart again. Let's go to daily. So it looks like it has, found some support at 3,800, 3,820 levels, and we'll have to see how this moves up from there. But definitely in a 4-year sideways move. I'm not sure whether the financial regulatory and deposit insurance bill has any effect on this right now. Too much event risk. I would perhaps not want to be associated with PSU banks right now, and look at some of the other better sectors, at least chart wise, that we have found so far. Moving on, auto is one place which has seen some magnificent action, and this is really interesting, surprising, given that we've got this big move with a very strong rising wedge in place. And not exactly sure about how to read this, but one of the biggest contributors in this is Maruti. And what is also interesting is that we have a longer and a longer bearish divergence, which is now going on for almost 6 months, and no resolution of that divergence, as you can very clearly see. So we'll have to see how this moves, and very not that of course anything can happen in the market, but given this multi-month rising wedge in BSE auto, chartistically at least, haven't seen many breakout moves like this. Almost always it's a breakdown move, So this is definitely looking interesting. On top of that, after the move of Monday, Tuesday, Wednesday, Monday, Tuesday of last week, we seem to be Wednesday, Thursday, Friday in a sideways sort of flag type narrow consolidation, and we'll have to see what happens after that. Okay. So BSE Auto definitely something cooking. But again, like I said, after a multi-month rising wedge like that, which is quite obvious and clear, and this big bearish divergence, I would be a little circumspect about this. And at the very least, I think this definitely demands greater investigation of what may be going on in individual stocks of the auto space, and then take a call. And but yeah. Okay, next is consumer durables. So that going up. Weekly chart, very strong breakout from 17,000 odd levels, 16,400, and continues to go up quite strongly. That's consumer durables, so new life high. Capital goods. So this is one place which seems to be a little stuck. Right. So far we've seen a lot of indices do very well. Capital goods, well, finally managed to peak its head above a 2-year resistance, 2015, this level, and then has managed to move up from there after consolidating for almost 4-5 weeks. Well, and we'll just have to wait and watch on this. And the big brother in capital goods is L&T. So if this is the move that L&T or capital goods makes, then please remember, if you have been regular, that this is possibly, of course, a breakout from a multi-year resistance, or well, it's not that much clear, but 2 years. And from here, there's really no, place in this for the last 10 years, and could easily move up from about where it is right now at 19,126 to about 20,900. So that is almost 1,000-point move. That's almost 5%. That could easily happen. But again, individual stocks need to be looked at, and like I said, the big daddy in this is capital goods. All right. So next, FMCG, and this is the FMCG weekly chart. Again, you're seeing a divergence here. Okay. It's not really a divergence. It's the FMCG inching back to its life high, as you can see. But both on the RSI, MACD, and all, really none of these indicators are anywhere close to what they should be in a healthy uptrend. So on the other hand, if you have more and more divergences which are not getting reset in terms of the price getting reset, it's also then a sign of a very strong inherent uptrend, right? So that's one thing to keep in mind. And then moving on to metals. So this was a classic textbook move. Again, if you've been regular on IMR, etc., and you remember the conversations, then we did mention about a test of this light pink line, which is at around 13,650, and that's what the market has done in the last 3-4 weeks. Came down, took some support, and then last week it did really well on the metals side. You can see on the daily chart here how well did it form almost a tweezer's bottom. Perhaps it did not really, but still good enough. Almost a tweezer's bottom. It has managed to really go up. After that, bounce up and has done a pretty good job going up there. All right. Okay, so Also, MACD crossover, you have that as a pretty good follow-up, though it is in the negative zone. And it could perhaps, still go up. So again, there was a bearish divergence between this and this here, between the MACD, RSI, and the price. Price corrected from around 15,060 to 13,300, and then after bottoming out, and MACD crossover, RSI also sort of bottoming out. Market's been going up, right? Not after that, while the price was doing that, the indicators lending come quite decent support to this up move, right? So there is metal for you. So metal index, definitely a small correction and then an up move again on a weekly chart is looking quite good, though on the weekly chart you have this negative crossover, right? So that is something to keep in mind. However, having said that, we are talking about a breakout from almost 5-6 years of a move, a fantastic double bottom at around 6,000, and then nicely trending up. If it continues to do that, then metals in an uptrend after this move is a little more established, could keep going up, right? So that's one more place to look at, up moves. Realty, well, again breaking out, moving good green Marubozu candles. However, negative divergence. But like I've been saying for reality for quite a few months right now, perhaps one of those sectors which have really, really bottomed out and then started to move. I think there were some individual reality stocks that did some good moves last week. We'll have to look deeper into that. But this, as you can see on the screen, if you can just pull yourself back from the screen and put some physical space, really step back 2-3 feet and look at this after a 4-year base formation. And let's look at monthly. It does this crazy, I don't know. It's a bit, do the software. Let's just make it day, weekly, and all the stocks, right? So this multi-year base formation could be starting. It has started definitely a very, very good higher top, higher bottom move after over 2 years. And from here could go much, 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 much higher, right? Technically, at least. Sensex, well, same thing as the Nifty. So looking at reviewing all this is the VIX index, which is again now trailing to the bottom and cracking. Sign of complacency and excessive optimism, perhaps. We'll have to again wait and watch. Just checking if there's anything I missed. Not really. Oh, this is interesting. Infra, right? Forming a typical symmetrical triangle. Not very usual to see such a good one, and that too on an index, right? This is a very, very textbook symmetrical triangle, and we'll just have to wait and watch as to which way it moves, breakout or breakdown. Way too early to comment on that, but with the rest of the market going up, one should perhaps expect an up move, but well, nothing is guaranteed. And if you go with the trend, multi-month, multi-year uptrend, etc., then one should be, like I said, trend is your friend. What a fantastic move from mid 2015, from 7,500 to 14,500, doubling almost, or at least 90%, 89, 90% up. That's really impressive. Yeah. CNX Energy and where is this? BSC Power, not exactly the same, right? And if you look at CNX Energy, I think is more has a very, very disproportionately high weightage of the oil energy stocks, oil and gas. But I think BSC Power is a little more balanced with thermal generation, things like Power Finance Corporation, etc. BSE Power, which is from 2011, which is an index which is longer than the CNX Energy, which is only from 2012, has a interesting situation in the sense that again, remember that, well, let's look at the weekly chart for better clarity. It has come to, or it has been for the whole of 2017. This is interesting. This whole year, the BSE Power has been consolidating. Went up from 1600 in early 2016 to 2300. Right? So for an index, that's quite substantial. Now consolidating at this zone sideways for a year, showing signs of really strong bullish moves, especially last week. It's the biggest or strongest green candle perhaps after this one, which was a straight almost meta marubozu, and indicating maybe a bias towards moving up. Nothing on the indicators to help us one way or the other. When you have such a 1 year long sideways move, indicators are more or less worthless to look at. Just have to wait and watch on price action. And what is definitely very, very key in terms of levels for this is above 23,060, and then another level below 22,000. Right, so these are really, really important to watch. Could put alerts if you wanted, and if this clears 2,400, then 2006, 2008, almost 10, 20, 25% moves could happen within a few weeks or maximum maybe 2-3 months, especially after a 1 year consolidation. Right, so power is where one could also focus on. FMCG, yeah, that's one thing we didn't see. Right, FMCG struggling now. Right, usually has been a pretty good mover in the last few many quarters rather, but now FMCG struggling vis-a-vis, let us say, things like auto, which one is that, metals, realty, and most importantly, what was that, yeah, I think, yeah, capital. Yeah. All right. So while FMCG still continues to go up, so looks like the GST thing all settled down. One of the things that was, of course, everything was affected, but in terms of retail pricing perception, that was one thing that was affected the most. And looks like the biggies like whatever ITC, HUL, Godrej, etc. have got their mojo back in the market and could be trending higher. What's clearly of surprise, I would say, is two things. One is auto, where the massive big breakout that on a weekly chart of a ascending or a rising wedge. Right? So that honestly, something like this is quite the first time to see that too on an index. Either it is an indication of a lot of significant bullishness to come in the auto space, or it could also be because this is a move, a trap for the bulls, and people rush in to buy these stocks, and in a few days or weeks then you see this place hammered down. Now which one is it? Is it a bull trap or is it a genuine breakout? Well, you can't say anything more from the charts, but being on the side of the trend, well, one should not be shorting, one should only be long. This is one very interesting space to look at, and the other one was, or is rather, IT on the long side. What's interesting for me in this today's IMR is that I haven't seen anything which I would be considering, also forget being very aggressive or convinced. I haven't seen anything which has any weakness worth tracking for a shorting trade or short trade. That is just simply does not seem to be there, at least in the sectoral indices. So for now, the Indian market being well supported externally and internally. Externally in the sense of global markets, especially US and UK, and internally with all the moves. Till 2 months back, if you remember, there was a lot of ifs and buts. Some sectors topping over and really coming down. others bottoming out and sort of starting to make a move up. Now everything seems to be in sync, and this is what happens. Things are sometimes out of sync, sometimes things are in sync, and then another out of sync phase will come, etc., and it will go on. But for now, looks like a lot of things are in sync on the bullish side, and well, I guess it's time to party while the sun shines, if you can say that in winter in India, and but still, I would advise caution in terms of strict stop losses and see how that pans out in the weeks to come. Right. So yeah. So to close the session, any trades that you do are probably long only, or rather, not probably, are long only in my opinion, and in whichever index or sector you are trading at, and there is no question of doing any shorts. However, it would be foolhardy to just leave things aside and not track. There is one thing. So now that the market has hit a new life high, sometime, hopefully maybe before the um, year is out, um, we'll do a deep FA review, especially since the index is hitting a new life high, and see fundamentally how things are standing at that front. But in the short term, long, plenty of opportunity on longs. In the next section, part 2 of the IMR, we will look at any individual stocks where there might be a lot of opportunity or good trading setups in the week or month ahead. So thank you very much. Ending the part 1 session here. There will be a part 2 following this for the Nifty stock review, and perhaps a few select ones outside the Nifty. And well, if you don't have another IMR this year, wishing you all the very best. Hope the year closes well for you with good health, prosperity, cheer, abundance, and that 2018 is actually a much, much, much better year in every sense than 2017 has been. Right? Thank you. Have a great weekend, and we'll catch those of you who are participating on the other side for part 2 of this IMR. Bye.